What is your earnings growth forecast for next year?
I think next year earnings growth will actually be more than double digits. But
oh, wow.
Part of it is the idea that this, like if you look at industrial earnings and basic materials and even energy, they've been smoking. Yeah, they've just been whiffing for more than a year.
Smoked.
Yeah.
And I think that that's the turn that's coming. So I think
that would be very powerful. I mean, my expectation is you get 5.5% and you get some multiple expansion, and that's what.
I just want to check and see what's in. What are you drinking?
No, Tom's quoting consensus.
Kool-Aid.
If you look at the FactSet numbers, they're exactly what Tom's saying. They're like 10 to 12% expectations for earnings growth next year. So, if we get past the election and the bumpiness in the middle of it, we should have really decent earnings coming in. So once we get past it, we can move on. We can start to grow again. We can have your own special fireworks. I'm going to consider them like sparklers. That 3,200 is only 4.5%.
So I've got another question. What if we don't get a trade deal? What if we don't get the election outcome we want? What if the market is not right on the Fed? Market's expecting 40 basis points more of cuts. What if everything doesn't play out in the Goldilocks storybook ending, right? What is the downside versus what is the upside if it plays out right? And I think what Steve's saying, what Jim's saying, what I'm saying is the upside feels like it's a little more capped. The downside, if this doesn't play out as expected, feels significant. And that's...
Yeah. I mean, it's hard to know.
That's fair and a good question.
Yeah, it's Rob, it's the key question. I think all that is discounted in S&P 30/50 is a low probability of a trade deal, no cyclical upturn, no industrial cycle bottoming. I think the market is priced in a lot of these concerns. So I think if we do get it, we have an asymmetric upside.
Okay.
I think the downside's limited just because of where credit is and where the Fed is, and
and where positioning is. It sounds like
yes,
you think there's a lot of cash on the side. Okay.
I'm sure there's a lot of cash on the sidelines, and if you just look at fund flows alone, it stuns me every time I see it how much money continues to pour out of equities. And then whenever I'm talking to new clients or even existing clients, nobody's happy. Right? Everyone who's getting in with cash is terrified that they're buying at a top. Everyone who's in is nervous that it's the top. There's a lot of fear that's holding the whole thing back. So I think Tom's right. Like I think it's priced in at this multiple.
A spring that's a little coiled.
And in theory, with Treasury yields where they are, the multiple on the S&P should be a lot higher than it is. So if you think maybe the multiple should be 18 to 20 times, trading at about 16.5 times would suggest that a lot of worst-case scenarios priced in.
I mean, you would think, given all of the risks that have been in front of us for the entire year, where positioning and sentiment has been for the bulk of the entire year, we're having the best year for the S&P since?
So if you took out 2013, it's the best in almost 23 years, which means in everyone's career. I mean, people managing money for 23 years haven't seen a market this good. And that's why I think there's a signal coming from what the market's telling us. I think the cycle's turning, and, I think people have priced in a lot of bad
All
news.
allocators have to decide when they want to hit the brake, tap the brake. There's a lot of decisions that go into this, and part of it's a function of how far you've traveled.
A lot of them have been riding the brake.
That's not been us. Yeah. We've been there. We just recently.
No, I'm not saying you in general. I'm just saying overall.
That's
been a feeling of riding the brake.
Yeah,
that's a factual statement, and that's why you have this potential uncoiled spring that's going to launch launch the market higher and get more people drawn in.
All right, good stuff. Good to see you. Thanks for coming out here.
Yeah, great to see you all.
Always engaged.